The skyrocketing prices in the housing market, coupled with the unexpected behavior of consumers, has created a strange and unprecedented supply constraint. People are desperate for relief, hoping for a crash that would make homes more affordable. However, month after month, they witness homes becoming even more expensive, surpassing all expectations. One of the most perplexing developments in the real estate market is the emergence of the new home market. Previously, new homes were always priced at a premium compared to existing ones. Yet in this bizarre market, brand new modern homes are being sold at prices similar to outdated existing homes. This defies all logic and challenges our understanding of consumer behavior. To underscore the unusual nature of this situation, let's consider the actions of Warren Buffett, the world's most successful investor. Despite widespread concerns about the housing market being in a massive bubble fueled by soaring prices, Buffett's company, Berkshire Hathaway, recently made substantial investments in 3 large publicly traded home builders, Dr. Horton, Pulta Group, and NVR. This move surprised many, given Buffett's reputation for avoiding bubbles and investing based on value. The fact that even Warren Buffett, renowned for his astute investment decisions, is entering the housing market despite the prevailing doubts about its stability, speaks volumes. It challenges the narrative that the market is on the brink of a crash and forces us to reconsider our assumptions. 3 major companies, Horton, Lehner, and Ryan Homes, are causing a stir in the U.S. housing market. This development is particularly noteworthy because renowned investor Warren Buffett, known for his safe long-term bets and remarkable track record, has taken a significant interest in it. Buffett's decision to invest in the housing market during a period when many people believe it is on the verge of a massive crash has raised eyebrows. Why would an investor of Buffett's caliber choose to place his chips on the table by investing in home builders when everyone else is predicting doom for the housing sector? Adding to the intrigue is the fact that stocks like D.R. Horton have already experienced a significant jump in value, almost doubling their 2020 highs. This means Buffett is not investing in a struggling company, but rather believes that the sector has been steadily heating up and shows potential for even greater success in the future. By placing his bets on housing, Berkshire Hathaway, Buffett's company, is signaling its confidence in a sustained bull run in the market for years to come. Taking a moment to review the situation, it becomes essential to understand the implications of Berkshire Hathaway's move. Why would anyone invest in housing at this point? To get a clearer picture, let's briefly look back at the year 2020 when interest rates and home prices began to rapidly rise. However, before we delve further into this analysis, I would like to take a moment to ask for your support. If you find this content informative and engaging, please consider subscribing and liking the video. The lock-in effect on the housing market was a well-known cause during the period in question. Many individuals who had the ability to refinance or secure low interest rates decided to freeze their real estate positions. This had a significant impact on trading mortgage rates, as people found it challenging to trade their current mortgage rates of 2.9% for newer ones that could be as high as 7.5% today. Consequently, this led to a tight inventory situation where there were very few houses available for sale. Even today, the inventory situation remains dire. Interestingly, this tight inventory situation contributed to a historic surge in the housing market for home builders. Companies like Horton experienced remarkable growth, with their stock price rising from $33 in 2020 to a high of $130 in 2023, an increase of 315%. And Horton was not alone in this success. Other major home builders achieved similar results. The reason behind this phenomenon was due to the rising prices of existing homes, which made new homes comparably affordable or only slightly more expensive. With this in mind, instead of significantly raising prices to maintain the typical new home premium, home builders opted to focus on gaining market share. Based on an analysis by Redfin, new construction now represents 1/3 of homes available for sale. Before the pandemic, this number stood at around 14%, highlighting that the new home market has doubled in size in relation to total sales since 2020. Approximately 33% of the homes sold in the United States are now newly constructed properties. Looking at various markets in the United States, it becomes evident that buying an old house may not make financial sense, especially when a new, modern build only involves a marginal difference in payment. Existing homes often come with numerous problems that are time-consuming and expensive to fix. For instance, a simple bathroom renovation can cost up to $10,000, even in cheaper markets. The increasing labor expenses have become exorbitant, making buyers more inclined to opt for new homes that offer a beautiful, move-in-ready interior without the need for upgrades. This trend explains why customers are leaning towards newly constructed properties and supports the rationale behind Warren Buffett's investment in homebuilders. Examining the research data, the current inventory of available homes for sale in the United States is 492,000, which is 10% less than the previous year. Currently, there is a significant number of potential buyers eagerly waiting to enter the market for second mortgages. They are patiently observing the mortgage rates, hoping for a drop to more reasonable levels before making their move. Furthermore, there are even more buyers ready to enter the market should prices decrease even slightly. This growing community of patient buyers has created a reserved demand in the market over the past 3 years. Whenever the market faces turbulence, whether due to declining mortgage rates or prices, these buyers seize the opportunity and drive the market forward. Their presence prevents any potential crash, ensuring the market remains stable. This group essentially acts as a support system, leading many to believe that the current market volatility is here to stay and that the residential real estate sector will continue to prosper. Understanding why this is happening is relatively straightforward. It is important to recognize that inventory plays a significant role in determining property prices. Over the past 5 to 6 years, there has been a noteworthy swing in the housing inventory, particularly in 2022. From the lowest point to the highest, there was a staggering 161% increase in available homes for sale during that year. Even though replicating this growth would be nearly impossible due to various factors, let's use it as a reference point. Even under the assumption that we managed to maintain a 161% inventory growth rate every year from now on, it would take more than 2 years to reach the same inventory levels witnessed in 2018, which were considered healthy at the time. Realistically speaking, sustaining a 161% inventory growth rate is nearly impossible. Additionally, there is a massive group of sideline buyers eagerly waiting to purchase any additional inventory that becomes available. Considering these factors, it becomes evident that the housing inventory situation in the United States will remain challenging for at least the next decade. Taking into account this analysis, it is easy to understand why Warren Buffett made significant investments in some of the country's largest home builders. His confidence in the market suggests he does not anticipate a crash similar to the one experienced in 2008. One of the primary reasons for this belief is the expectation that inventory will continue to remain scarce for many years to come. Thank you for watching.